Friday.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who's interested in opening an account on our new trading platform, then please do not hesitate to visit our website, dmmtradingplatform.com. You can find the website link in the description of today's video. But let's start here with the Nasdaq100, and I would actually like to start by focusing on some of the real negative comments I've had on my YouTube channel as of recent. And, I'd just like to take this opportunity to come out and just apologize to anyone who was solely listening to my advice over the past couple of weeks, where I had been dollar cost averaging towards the upside. So I was shorting the market from the 50-day EMA all the way up to the 200-day EMA. And, I've got it wrong. We've actually broken out past the 200-day EMA. And I think, reflecting on my mistakes over the past couple of days, I think where I made a big mistake is that I need to understand that the stock market and the economy are two separate things. And, many investors made this mistake just a few years ago when it was COVID, when we first had our lockdowns back in March 2020, we had a huge sell-off here of approximately 30% towards the downside. And all of a sudden, we had a very fast V-shaped recovery. And that's, of course, because of the Fed slashing interest rates and, governments giving out furlough deals, etc. And, the economy was a mess for the next 2 years. We all still have fears about it. I've been stuck in our homes, going in and out of lockdowns, not knowing whether we're going to be able to go on holiday, not knowing whether we'll be able to go to work, etc. But one thing that happened is that the Fed supported us, and so did the governments by sending us money. And, even though the economy was a mess, the Fed had our backs, and, the stock market rallied significantly. So I think this is a great example where, the economy and the stock market are two separate things. And, I guess that's where I probably got this wrong here, because my bias at this moment in time is that we shouldn't be trading up near here. We should be trading probably down here, near the lows, down near that 0.236 fib area. And I say that is because my outlook going into this winter is very bleak. I think that, many families are going to really struggle to pay their bills, put food on the table, let alone go out and buy a new Tesla or a new MacBook, iPhone, game computer, you name it. But, again, I have to understand that the stock market doesn't care about my bias. It doesn't care about my opinion. Okay, the price is always right. It doesn't even know who I am. And I have to understand that if technically the market has broken out here, then I have to respect that. And one element that traders, or one skill that traders lack, and hence that's why 85% of retail traders lose money, is that they don't identify quick enough when they've made a mistake, or they're too stubborn to admit that they've made one. And, now that we've broken out of this downtrend, it's now time for myself to come out and say, Max, you've got it completely wrong. The 50-day to the 200-day EMA, you were looking for a rejection up in this area here. We didn't get it. We've had that daily close above the 200-day EMA. We did form a nice shooting star, but we've broken above it. And now this market looks very likely that it's going to go up to that 0.5 fib area, which is all the way up at around 13,900. So I would not be surprised to see the market rally towards those highs. Now, I've gone out yesterday and I've put most of my cash to work buying, some of the big FANG names, the big tech stocks, Nvidia, for example. And, I'm very bullish now, because history would tell us is that, when we're trading in a bear market, once you reclaw 50% of the losses, that means that the lows are already in. So that would indicate that on June 16th, around 11,060, the lows are in. So what does this mean? Could the market potentially, turn upside down now and go and trade back down towards those fresh lows? Absolutely. I'm not saying that can't happen. Just because I've come out and said that my bias is now bullish, that doesn't mean that we can't go back down towards the lows. But what it does mean is that the positions that I opened yesterday, I'm going to be sticking with them through thick and thin. So if we have to go down here, that's absolutely fine. I'll load up some more cash that I've got sitting on the sidelines at these low levels. That's absolutely fine, because ultimately I do expect my stocks to be trading back up near their all-time highs, because I've bought good, high-quality growth names. And then with regards to the leverage trading, so CFD trading, am I buying here? No, I'm not. Okay, just because I've turned bullish now, it doesn't mean that I'm buying up at these high levels, because look at the RSI. In the S&P 500, it's overbought. The Dow's overbought. The Nasdaq100 is pretty much there. RSI is currently at 68. So this tells me that we are probably due a pullback. And, you know, if you want to ask me how much, I don't have a crystal ball, so I can't tell exactly what. I can't tell you exactly how much that we could potentially pull back by, but my guess would be down towards that 0.382 fib area, or, you know, perhaps a 200-day EMA. So that gives us around 2.5 to 3% decline. Now that is an area where I am interested in buying on my leveraged accounts. I don't want to give into FOMO and buy here, and then, you know, come tomorrow, once we get the Fed's minutes meeting, something triggers a sharp sell-off towards a downside. That's not what I'm looking to do. I'm looking to buy any value that's created by a decline. So I'm actually hoping for a decline down to that 200-day EMA. And then that's an area where I have to buy the market. I have to admit that I've got it wrong. And once again, I'm very sorry to anyone who's lost money over the past couple of days or weeks listening to my advice. And just on that point, guys, I really do, want you to understand that I am not a financial advisor. I use YouTube as a platform to share my opinion. If you scroll down and read the description of every single video I've posted since 2019, I've made it clear that before entering any positions, you should do your own due diligence. And I understand if I get it wrong, you must be frustrated, but you have to be extremely naive to think that I'm going to get it right every single time. And it's where it comes down to risk management. You have to be making sure that your risk management is on point. But, you know, in terms of myself, you know, I don't appreciate seeing the negative comments as of recent on my YouTube channel, but I can tolerate it. I understand it. I see myself as a sponge. And if you do lose money and you feel the need to come onto my YouTube channel and post something negative, that's fine. I completely get it. Okay, so I'm not, you know, again, just please make sure you do your own due diligence. I'm not regulated to be a financial advisor. I want to make that extremely clear. So any losses that that occurred during your trading careers or stuff, they are down to you and you only. You know, I have a perfect risk disclaimer in the description of my video. But, you know, moving on to my bias here for the Nasdaq100 is that I'm waiting for that pullback, and then I believe it will offer a fantastic buying opportunity. And with my own money, I will be buying that dip.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is